I sure am grateful that I saw the Tesla chart correctly and predicted that that bald candle was going to give us another push higher. And I sure am glad to have predicted that yesterday and seen it today. If you participated from Friday, Monday, and Wednesday's video, the message was very clear. Go back and watch Friday's video. It was big tech breaking out, and that was Tesla. And it jumped pretty much $20 a day over the course of time. And yesterday I highlighted the fact, and I'm going to show it to you guys in the chart, because even if you missed it, it's the technicals that you're putting your eyes on that'll help you recognize in the future how to take bigger risk decisions with more confidence. Yesterday, we had a bald candle on a high momentum move on Tesla. And I said, until we get a ugly rejection wick, this thing is going to push higher. And today we saw that move. And then we got something on the chart that tells us to slow down, pump the brakes. And that's that rejection wick that we didn't have yesterday. So I'll take you into that chart and that'll become clear. I've got a handful of small cap stocks that I'd love to drop some information on, but I may just highlight one. And we're going to talk briefly about a healthcare stock, and I'm going to go over a potential leap option trade for that play. You could also buy the shares. You don't have to sign off if you don't know how to do options, but I'm going to just talk to you about why the particular leap I'm looking at has some good and some bad in it, what the advantages or disadvantages are. It's going to be like a little mini leaps options class. I'd like to formally welcome you to Wall Street. This is the Stocks with Josh show. We run off the charts because I believe that price is truth. And even though there's a lot of fear mongers and pundits that will try to panic you into letting go of a position, or even in some cases, try to get you to get onto a position, we don't want to do that. We don't want to be running with the herd. We want to be watching the charts and following them. The markets were, as I said yesterday, climbing that wall of worry, looking for harder data, ignoring the government shutdown, being irrational. We have the macro and the micro. The macro is the big picture view of what the markets think of investing and taking risk right now, which is that they're very, very bullish. In the micro, we could expect a pullback or correction at any given moment. Now, here's the rock and the hard place that the market is between. We are right around the corner going to be starting up big tech Q3 earnings. And that might be the catalyst. If the market doesn't like it, that might be the moment in which the market decides to take that very overdue correction. The market has corrections, at least over the course of time that we've been in, from April's V-shaped bottom move back up to these all-time highs and making new all-time highs every single day. The market has pullbacks. Most of the time, every couple of months, it gets a quick 2% market stress test. If it quickly rebounds, then we know that the market is strong. Every once in a while, it needs a stronger stress test between 3 to 5, maybe even as much as 6%. And right now, the market hasn't had that for months and months and months, and that's unusual. 2025 is going to run hot the entire year because we've got a path towards rate cuts. We're keeping our eye on the data. We're keeping our eye on inflation. We're keeping our eye on what the Fed says. But the fact is, there's a clear path to rate cuts. It's only when the Fed begins to say, I'm not going to cut any more rates in 2026, that the market's really going to take a step back and have to evaluate these lofty, frothy tops. Again, thank you for watching the show. Hit the like and subscribe so you can get my daily commentary as well as the plays that I'm dropping. You can make money, I believe, just following my YouTube page. But if you want to get in deeper with me and get daily plays, get option alerts, as well as stocks that we're swing trading, as well as scalps. Scalps are for the day traders, right? We take those the first couple hours the market is open. I have all of that in my pro trading community called Chart Goat University, Stocks with Josh fam, right? In addition to that, you say, well, I'm not I got a small account, Josh, and I don't really know how to scalp or do options, and I don't have the time to swing trade. That's okay. You can get into this community where I can tell you it's a safe community. I don't do the cursing. I don't do any degrading of anybody. It's a protected and safe community where there's a lot of encouragement and a lot of teaching, not just by me, but me and my Crown traders. My crew is in there helping people. My admins are the best of the best, and they're answering questions and guiding you along and sometimes explaining something I said. So don't sleep on the Stocks with Josh Discord. It's the name of the show, is the name of the website, www.stockswithjosh.com. All right, let's get into Tesla chart. This is the same chart we looked at yesterday. And I want to highlight right over here what we talked about. So right here is where this move closed. So this previous move ran up to 437.50 and the candle closed. After that, it had a huge push up, gave this monumental rejection candle, and that was the beginning of the downturn that took Tesla all the way back down to around 220, okay, under 220. Now, I also highlighted yesterday that we have the same situation here where where Tesla had a huge move up. It closed up around 250, then it got a doji candle, and that led to a rollover. And I highlighted the fact that we didn't have that yesterday. In yesterday's weekly candle, we were sitting around 460, and it was a bald candle, and I said this candle still looks good, which means we'll move higher. Now, 479.42 is the price point that Tesla hit before the market opened. So we basically went from 460 in yesterday's video, another $20 higher up to 480. And then we got the doji at both ascending resistance as well as a previous historic high closed candle resistance on the weekly time frame. All of that is this 437.50. So keeping things very simple, I want you guys to be aware that we now have a very clearly defined range, which we could retest 479 and reject again. Or if we break 437.50, we could expect that, yes, we could actually move all the way back on Tesla. Now, what I want you guys to take away is that I'm not predicting that move. This is an if-then scenario, which means you kind of have to babysit some candles and watch these charts. I gave you guys 437.50 as the breakdown. If we close a weekly candle or even a two-day candle underneath that price point, then we've got to be on high alert that the uptrend has essentially been put on hold for now, and we're going to pull back a little bit. Remember, Tesla's running hot. They do have some bullish catalysts that are pushing the stock price higher right now, and we are moving towards Q3 earnings, and so I do not expect this move to be over. I expect much higher volatility, and the takeaway from today's video is that the easy charting is behind us. The easy charting for when we were going to get a additional move higher, well, that was yesterday at 460, and we got that move. Now we've got the indecision candle on the weekly, which means that at this point, it's not easy. We got to wait for its next move. The next move is either going to be beneath 437 or above 480 for a continuation, and at that point, that's going to be news driven, and perhaps it's their Q3 earnings. So there's Tesla. Now, I promised you a video on some healthcare stocks, and I'm going to keep my word. And I'm going to go over one right now, and we're going to talk a little bit about looking at this as a long-term investment and looking at leaps. But I also want to highlight a lot of small cap stocks that people have been asking me about, such as Serve and SoFi. And I have to briefly mention that Poet that I talked about yesterday jumped again today. And a lot of people said, well, Josh, you gave us a stop loss of 560. Yes, because every single position of risk I put on that isn't in my long-term portfolio that I don't intend to accumulate slowly over years, every single swing trade I put on a stop loss, and 560 was the right stop loss. And when it broke, I got to let it go. But I liked it. I kept an eye on the chart. And in a live trade session in the Stocks with Josh Discord, I said, 530 is looking like a really good buy spot for me. And that's how we got back into that. Now, I'm going to just make this point. You're going to get a lot from me on YouTube, but not everything. There's going to be times when I continue the conversation about something I share on YouTube. I continue that in a live session in the Discord, right? Or in a live trade session. Those videos are only available in my Discord. So if you're following me, you just need to be aware that you're not going to get every update on YouTube on every stock I talk about, because I simply can't. I don't have enough time to do that. I've got more stocks I'm interested in watching and trading than I've got time to make YouTube videos. I think that makes sense. Let me know. Let everybody know in the comment section if you've been making some money following this page. There's plenty of opportunity to make money just watching the YouTube channel, but it won't be enough. You're going to need patience and you're going to need discipline, as well as you need a plan. I've been saying that, and you can't run off of what you think my plan is because you may not understand it. I'm just giving you bits and pieces of it, and it evolves every day because we follow the charts. All right, let's talk about, let's get into the healthcare stock BMY, Bristol Myers Squibb. Now, this chart, it doesn't look good. I'm going to take you into the chart, and then I'm going to share a possible leap option, and we're going to just discuss the pros and the cons to potentially taking a position right now. This chart is in a clearly defined downtrend, and we do not have a confirmed reversal move yet. However, there are some things which are causing it to be of interest, and every trade or investment you make is going to have a degree of risk. And again, that's why we use a stop loss. The risk on this particular play is looking more attractive, but let me get you into the chart and we'll go from there. All right, we are looking at monthly candles, and the first thing that I want to highlight to you is that Bristol Myers was way up here at around $80 back in 2022, and it went on a 20-month down streak, about a 51% fall off from its all-time high, and then of course it bounced and it moved up around 61% from the low 40s all the way up to around $60, and then since then it got another beat down. But the way that charters look at this chart right now is that it had a huge sell-off back here in 2022, and that potentially the worst of it was over here in 2024, and now it is slowly beginning to rebuild its long-term trend higher, and this is referred to as basing, okay? Now, one of the other things I find attractive about this chart is going to be the RSI. Let's look at that. Now, why is the RSI on BMY looking interesting? Well, we had a double bottom of bearish momentum where this got oversold twice. And from a momentum perspective, this sort of indicates that the worst fear about BMY is in the past. After it had a double bottom in momentum, it then moved back up and briefly was above the 50% level, but it could not sustain it. Now, in the world of the RSI, we're looking at different levels. The next level we're watching for momentum to hold is the 40% level, and it's sitting at that today. So as far as jumping into BMY for a long-term play, at the moment, it's got a pretty negative candle. And so I think that if you did jump into it today, a reasonable stop loss would be at $45.20. And if for some reason that stopped you out, then you'd be watching the $42 level very closely to see if it came down and it bounced. So the message that is in this chart is that the bearish momentum seems to have maxed, and we could be basing for an eventual climb higher. Now, the next thing that we want to do is we want to analyze the leaps and why, in particular, leap options for a play like this could work out by giving them some time. That's what you've got with leap options, is you're buying a really far out date, typically 12 months out before expiration. The delta is pretty good and the theta is pretty low, and more importantly, the implied volatility, which determines what the premium cost would be, is also very low, which means that you can buy these calls very cheap because, as I mentioned before, this thing has been under a bearish cloud since 2022. But that RSI is suggesting, as well as the price action, that we might be basing, and we're beginning to see some other healthcare stocks come to life. Well, eventually, that positive light might shine on BMY, and this could be a long-term play. Let's talk briefly about the Greeks. Now, I don't want to lose a lot of you. The Greeks is a term that talks about the factors that move the value of an option, and I'm going to go over those with you. So the option that I'm looking at, and I haven't gotten into this yet, okay? I haven't gotten into it just yet. But the option I'm looking at are September 18th, 2026. Now, I'm just looking at these for my example. I will notify the Stocks with Josh Discord of the specific position and the specific option when I take it. So I'm looking at September 18th for this example, 2026. The delta is 0.66, which means that when we get above the strike price, every dollar move above the strike price will increase the value of the option by 66 cents. That's a pretty good delta on an option. And the IV is only 22%, which means that the premium cost of these options is very low, or it means they're very cheap, which also means that if this does reverse and has a huge $10, $20 pop, these could get pretty profitable pretty quickly. So let's recap what I've just said about BMY and why I'm beginning to set some eyes on these types of plays, and specifically BMY because it hasn't been moving as quickly as, let's say, UNH, which had a move recently, and Eli Lilly, which had a very powerful move recently. Those were also good leap plays. We talked about UNH in the Stocks with Josh Discord in this channel some time back. But BMY may eventually move in sympathy as the market begins to recover, and most people assume that the worst is behind healthcare and that that downturn has come to an end. But as the price begins to move up or even get more volatile, the price of the options will increase because the IV will increase. And instead of them being priced at 22% IV, you might get 50, 60, 70, 80, 90, which simply means that the $5 options you could buy today, if this began to get more volatile, could be $9 to $10 in just a month from now. Now, worst case scenario, between now and September of 2026, to be fully at break even, which means to not lose a dime, this simply has to go up 9% from where it's at today. So that might have gone over some people's heads, but I hope that it helps some people in understanding why we might look at these plays right now and why those leap options might be good. I'm going to look at it some more. Today's a down day, so I'm going to let it cook. As I mentioned at the beginning of the video, we've been climbing this wall of worry, but Tesla just got a rejection, and a couple other things I saw looked a little bit bearish. And so let's see how this next week plays out. Let's see what the markets do, and then we're looking to shop and make some investments. I still have my eye on Amazon. I believe Amazon may yet be the best big tech play to get into now for profits by the end of the year. So I like some of these small caps, and I'll just have to save that conversation for the next video. Make sure you hit the like and subscribe and the all notification bell to get these alerts for these videos, and come check me out in the Stocks with Josh Discord tomorrow. I'm going to be live trading with the family. We're going to be looking to make some money. Peace and blessings, my friends. I'll see you in the next video.